Hello, reality community. I just wanted to make a quick video to demonstrate cloud seeding. Cloud seeding is the token launch mechanism for reality applications. It's a way for you to launch a token on the network in a regulatorily compliant fashion, something that we are very excited about and have introduced recently. So I'm just going to walk us through how cloud seeding works, and we will be launching it shortly for the applications that are building on our network, give them a way to launch their own tokens and to get started with their community. So we're at Portal now, which is our desktop application for running nodes. And we're going to skip through this carousel and go to local dev for demonstration purposes. And we'll do the classic method for generating keys because it's just a bit simpler. Okay, so here's cloud seeding. This is kind of the dashboard that shows you all of the token launches that are happening on the network. We have an example launch here, Skynode. It's a fictional application, but it reflects how this is going to work. So let's click into this and take a look. So this is what you will see when an application is launching a token. You have the token ticker here, Sky. You have various parameters like the price, the total supply, the supply for sale, etc. This is the progress bar that will show you the raise progress, including the soft cap, which is the minimum amount of net that will need to be invested for this launch to execute, and the hard cap. Here you can see token utility, and this is where you specify as a developer of the wrap what utility your token is going to have. And that's very important because to be compliant, your token has to do something on your application, in your application, right? So it's like, it cannot just be some arbitrary token that is another way for you to make money. It has to serve some function. And here we can see Sky, its utility as a decentralized edge compute orchestration and node staking. That's what the token is for. And here it shows exactly what it does, right? Redistribute compute jobs, node staking, could be a security function, and governance. It also has exclusions. This does not provide equity rights, profit sharing, dividends, right? These all probably sound familiar from Howie. We are not trying to launch security tokens on this network, only utility tokens, right? And these are the classic features associated with security tokens, investment contracts, etc. So when you're launching your token, you have to avow to these exclusions. Here you can see governance is one of the functions. It will specify, exactly what that covers, like governance decisions over network parameters, fee schedules, and protocol upgrades. Here you have a brief statement of whether the actual application is functional yet. Many applications are going to launch and be functional before they launch the token, right? Including Reality Network as a whole. We are not doing the typical thing where the token is just a speculative instrument that is used to fund something that's coming in the future. Reality Network is live and operational. Our token is going to be launched after the mainnet launch, thereby demonstrating, that this is all working. We're not just here trying to encourage people to speculate. We're showing you what you're investing in advance. So here is the tokenomics section. It shows the token allocations. This 17% insider is an important bit of data. Is generally speaking, we want to cap the amount of tokens that are going to insiders because there seems to be an emerging regulatory consensus that insiders should not have more than 20% of the token, or the governance rights for that matter, if the application in question is truly going to be, or deemed to be, decentralized, okay? Here you can see the various ways that the allocations of the token, right? So the 5% of the total supply for public sale, 5% for treasury, which constitutes insider, 2% for advisors, 10% for team, also insider. If you have a liquidity pool or you're giving this to market makers potentially, that would be included in the insider. And here we just have a brief explanation. This is provisional. The Clarity Act has not been passed yet. It's still being negotiated on in the US. So this is all subject to change, but you get the idea of how this will work. Here it shows the vesting schedules and who those vesting schedules are to be attributed to. So like T vesting, treasury vesting, cliffs and vesting schedules, the timelines. Here are the sale parameters. So this applies if you opt for a liquidity bootstrapping pool. That's one of the possible models of launching a token. It's really pioneered by Fjord Foundry, and it's a way to find a fair market value for a token when it just launches. And we really like that model. To explain a little bit how it works, when the token launches, it is at kind of 100% of the, there's a weighting between the token price and the net, and it slowly decays over time, and people can buy in along this curve depending upon what they view the token value is. And then at the end of this period, the price is fixed based upon the buy-ins that were made during this period. And so here it explains that the price starts high and declines over time as the weights shift. Purchases push the price up against the curve, and that means that as people purchase the token, it gets driven back up, right? You're keeping the price high. And so the reason that this time decay model works very well is because it stops bots and snipers from entering into a token sale early and then dumping that token on the market, right? When the price is higher to begin with, it is a disincentive for people who would do that kind of thing. Down here you can see the duration of the token sale, 3 days. It can be longer, minimum commit, maximum commit. All of this is kind of self-explanatory. Here it explains the vesting schedules associated with the sale, 20% unlocked at TGE, and then vested over 5 months. That gives you an idea of, you know, how much liquidity there is liable to be if people are, say, selling off tokens as they're unlocked and as they're vested. This gives you a sense of what that will look like, right? Which enables fairer price discovery in general. Here you can add in loyalty bonuses for holding. A seed score also may be implemented as a gating mechanism. And this is essentially reflects a calculation of how much a person has dumped, like in the past. So it's kind of a signal of the commitment of your investors to your project for the long term. We think that's really important. You know, markets, although they're often spoken about purely in terms of like rational utility maximizing agents, there's really a psychological and social dimension to them as well. And this is what the seed score is meant to capture, right? We want to know, who are these people? Do they really care about your project? Or are they just people who are scalping tokens and dumping them on the market? You can configure this so that you exclude those types of people, which we think is a pretty cool feature. It's kind of inspired by Coinbase and their anti-dumping mechanisms that they implemented in the Monad ICO. Here you can see the net proceeds allocation. So this is how the investment that you make will be allocated by the wrap developer or the company in question. So, you know, the wrap developer may have various needs, some of which would entail selling the net, but some of which will entail holding and staking the net. So for example, if you want the wrap developer to stake the net that you provide in this token raise, then you can, this can be stipulated here, right? So you'll know how much is actually going to be staked of your investment. Here we have an overview of the vesting timeline. Again, it gives you an idea of the liquidity and sell pressure. Here, compliance and KYC. This is for OFAC for sanction screening. You can see down here block jurisdictions and restricted jurisdictions, and also KYC that can be configured depending upon how much the ticket size is. Right, so if somebody is only investing 1,000 net, maybe that's trivial, so you don't require KYC. Larger amounts will require more KYC. This is basically to kind of mitigate your risk in a sensible way in terms of trying to comply with FinCEN regulations and those kind of things. And so down here, you've got your disclaimers and risk warnings that you should read before participating. And then if you're satisfied, you can decide to commit net. You can specify how much you're committing. It has to be at least the minimum or maximum. And then you click on these acknowledgements, read through them all. All of the standard risks apply. There can be early exit fees if this is configured by the wrap developer. And that's that. You commit. And yeah. Then you have committed 50net to this cloud seed. You will receive your Sky tokens in accordance with the parameters set out above, vesting schedules, lockups, etc. So that's an example of how this works. If we want, we can actually go back to cloud seeding and see how, as a wrap developer, you would launch a cloud seed. So here, it takes you through the flow, right? There's 9 steps total. It's very simple. Put in your wrap name, put in your token, for example, total supply, tokens for sale. So like what percentage of the total supply are you going to be selling in this cloud seed? Then you can choose the sale type. Already gone through the liquidity bootstrapping pool, but fixed price if you want to specify a particular price that you think your token is worth. You can do that here. You can choose the allocation method, which is essentially, first come, first served, pro rata or lottery. And so like, for instance, pro rata is going to be all your investors are going to get an allocation proportional to the percentage that they have of the total amount invested. Okay. Then you go next. Here you have to specify the token utility, and it's great to be very specific here. So like you could say skin in the game for anti-cheat node and anti-cheat esports platform. That's how you would do that. You can specify the launch date. It could be the 22nd, or you can say it's already functional, which is always good from a regulator perspective. To already have a wrap that's functional is a probative factor when considering whether it's decentralized. And so here include governance rights, and you can specify like exactly what those would include. So for instance, if you have a DAO and that DAO involves the token stake as determining whether people get governance rights, you can tick this box and then you put in like what do those governance rights apply to. So protocol parameter adjustments. So for instance, if you're affecting the reward rate for nodes who are hosting your wrap, and that can be governed by the DAO's votes, then you can put that here. Here you have to attest to the mandatory exclusions. And then you go next. Here you define those allocations, which we previously discussed. Keeping in mind the insider allocation should be below 20%. Again, this is subject to change, right? So it depends on what happens with the Clarity Act. Depends where you're selling your token. Right now, we have just proposed new digital asset legislation in Prospera. And so this will depend to some extent on where you're actually targeting as a jurisdiction. If you're completely cutting out US investors, then this may not be relevant. So next, you can go to the anti-dump mechanisms. You can require a minimum seed score, as we discussed previously. You can enable a loyalty bonus for people who hold the token past a certain point, right? That's rewarding commitment, the right kind of people that you want to be investing in your token. You can specify the cliff, the period during which nobody can sell tokens, that no tokens are released. And then you can specify a vesting schedule to be, say, 2 years. And all of this is designed to be maximally configurable for you as a wrap developer, because one size doesn't fit all. right? There are many different types of applications subject to different kinds of requirements. So we want to give you maximal creative freedom, right? That will fit with what you specifically want to achieve for your reality application. So here next, you can set how much of the net that is invested in your cloud seed goes to what, right? So you can have node staking specified if you want a liquidity pool, if you want some to go to development. So like, for instance, if this is specified by the app developer, say they have like 25% of the net they receive is going to go to development costs, this means that this 25% is likely to be sold off for fiat in order to pay development costs. So each of these has kind of implications that have to be thought about, right, and fit to your situation. You can set a burn here, you can set network staking here. It all depends upon what you need. Here you can set the soft and hard caps. You can also determine what happens with any tokens that aren't sold during the LBP. So this may return the tokens to the creator, which may, as we mentioned here, increase insider holdings. So it's important to be thoughtful about this stuff. You can't just burn and return to creator. Maybe that creates more sell pressure. Maybe you add it to a liquidity pool, providing liquidity for people who are trading your token on the market. Here we have like KYC and compliance. You can put in the jurisdictions that you want to absolutely block, and then other ones that are restricted. Here you set the KYC tiers, depending upon, you know, what you're worried about, AML, KYC kind of stuff. And yeah, this should say min contribution. We'll fix that. Enhanced can be, so KYC basic might be you only require an email address, some form of like basic identification. Enhanced might be something way more intense, like getting a lawyer to sign off on something. So next, you can see the full overview of everything you set here, and you just confirm everything looks okay. You tick all of these boxes, and you publish. And we're working on getting this implemented on the back end, but that's, you know, a high-level overview of how you launch tokens and applications on Reality Network. Thanks for tuning in.